Good morning, everybody. Hope that you're all doing well this Easter week. So far for this week, I haven't seen much in the sense of markets. It's a new month with things going on everywhere. Markets have been slow, and I've not expected much in the way of big movers. So Monday, let me go in and add the calendar here. Right, there you go. Be looking at the calendar now. For Monday, we had 10:30 fade chair. So didn't expect much going on Monday morning. Didn't expect much. Didn't see much. In the way of Tuesday, we're looking at 10 a.m. JOLTS jobs, which again, not much. Didn't expect much. Again, did not see much. And it is NFP week. Non-farm payroll Friday morning, 8:30. New month. It's Easter, so there ain't gonna be much in the market. Usually a time when ICT takes off and he spends with family, and usually a time that I don't really see much in the way of movement in the market. So I never go in this week expecting to see anything massive, especially with everything that's going on. I definitely don't expect any massive movers. So my goal here, or my goal approaching the week, is if I can find a niche or a small little cookie cutter to carve out something, and in a sense take something home and close the week off with more than what I had. That's the approach that I have, that I took into this week. Not expecting much. Market conditions have not been very good. That to uh, adds to my expectation of not expecting very much. So in other words, you take a small little chunk and you're content with that, and you're in and out, and that's it. You're not sitting there expecting massive movers. Go over to the charts. Okay, before we go over to the chart, yesterday we had ADP non-employment change, 8:30 core retail sales, and then PMI at 10. Not much happened. Uh, right around here, not much happened. Was this Wednesday? Okay, we'll get to that. We'll get to that, and I'll explain that price action and why I said not much happened there. But anyway, starting the week off Monday, you see 8:30 we had a high in place here. We had a low over here. Very good day for your journal uh, because of this. Now, London high, day 7 o'clock, almost into the 8 a.m. And then you had a London low right there. So the thing here, we closed right on. We traded through and then came back and closed on this London low. Not what I wanted to see. So that, to me, immediately this was a, like, okay, well, it didn't really close above it with conviction. It closed above the price, yes, but it didn't do so with a lot of conviction, a lot of volatility, with a big up close candle. So it takes the probabilities down. I remember at the time looking at US 500. I just want to go and look at this. Ah, yeah. Okay, let me pull this chart up real quick. So this is US 500. Okay, yes. Looking at the Monday's trading, pretty much would have been using this low here. That would have been your AM low. See how we closed above this with more conviction. That's what I'm looking for. Okay, that's what I would expect. That's what I would want to see. Hopefully, you guys did. Yeah, you were not looking at the calendar back there. But if you were, then Monday's price action, we had this London high, London low, and we closed right on this London low. We didn't close above this with a lot of conviction, a lot of momentum, a lot of volatility, or with a big up close candle like we did on ES. I want to see that close above it with conviction. Because if it doesn't close above the level with conviction, then we're likely to get a reversal, which in this case, you can see we opened, traded higher, traded lower, we opened up, and we traded both sides of the marketplace, closed inconsistent, and then traded lower. We'll have to go to a lower time frame to see what happened. Let's go ahead and let's do this now. So let me just see what time. I think it was 10, 10, 10, 10. Let's see, 10. Okay, so you're going to look at 11. Let's just use this. March. That should do. And yeah, let's just go over to 11. So pretty much you're presented with this. Price closed above the level. Like I said, just barely, not with conviction. Isn't much here in the way of PDAs. You've got up close candles here, which is a breaker block. Low high, lower low, breaker block, up close candle. And then you have a fair value gap sitting here. Okay. The moment we traded down this heavily, I love to see it a straight down, not really go below uh, consequent encroachment. If we do, it's got to be a fast movement and it's got to come above consequent encroachment and stay above consequent encroachment and close above it. I want to see a reaction, immediate reaction there. In this case, we just kept tanking. So to me, that was an immediate, it's done. There's nothing. Okay, it's going to go lower. That's it. And she is just meandered around. And came back above. We also had this order block here. These consecutive down close candles, that would have been an order block. Fit it through. Tasted it one more time, rallied up higher. Okay. I want to see clean setup. I always have talked about a clean base. Clean base is I want to see a clean setup. So I want to see a clear PD array, like a breaker block, order block, fair value gap, inversion, or an overlapping of PD arrays. Those could be breaker blocks and inversions, or order blocks and inversions. Something like we had here, where we had the breaker block and we had the fair value gap and they overlap. That's what I want to see. That's the criteria. Then I like to see clean price. Okay, price was not clean in here. Look at all the wicks. Look at the wicks. Look at these candles. They didn't move a lot. Okay, they wicked. Lots of back and forth movement. Look back up here. That's clean. See? It's clean. Look at these candles. It's clean. That's what I'm talking about. I want to see something clean and clear. Yes, we had a clear displacement, but we didn't get a clear closure on the 1 hour chart above this level with conviction, with a big up candle, with a lot of oomph. Okay, I want to see it really close above it. It needs to show me that it wants to get back above this level, that it wants to go somewhere. That's what I want to see. I want to see the elephant stepping in, saying, "No, you're not going to go down there. We're pulling you guys. We're pulling it back out of that price range. We got somewhere else to go. We're not going lower. We ain't going lower today." I want to see that. Okay. So yes, we got the displacement on the lower time frame. So what do I want to see? I come in, it's 11 o'clock. First I look how my candle closes and I see, okay, it didn't really get up there with a lot of conviction. Okay, come down to a lower time frame. I'm greeted with this. What do I have? Fair value gap, breaker block, bam, overlapping with order blocks. So when I see all this stuff come together, this gives me a rough idea of where I want to be. Long entry price is roughly going to be here. Looking at the that, look at this breaker block expected to come into this level ish here. Okay, and the stop would be, my stop usually is 15%, and then I go for 22% as a take profit because it's a 5 minute chart. It gives me more movement than the 1 minute. So that's why I allow for a bit more movement and utilize the bigger stop, and I give myself a bigger take profit so that I aim for a 1 to 1.5. Okay, 1 to 1.5. Not bad. So that's what I'm looking for. And that's more than plenty if you start doing multiple contracts. Okay, then you got another contract on, you take one off at the 20. Okay, we'll make it 20. I usually go for 20, 22 right there. So you take one off there and you move the stop to even, and you have one runner that's still on the uh, still active, still in the market. And that's up to you to decide, where do you take the second profit? Do you take it at another high? Do you take it inside of a fair value gap? You got to look at what's on the chart, what's available to you. You obviously need to have another hard exit point of, let's say, I don't know, maybe you're gonna target 30%. Okay, something like that. 30%, you're gonna take another one off, or maybe you want to go for 40%, and that will be 20 handles. Okay, 20% is 10 handles, so then you're gonna go for 20 handles, or do you want to take something at 15? Really up to you. Gotta see what you feel comfortable with, honestly. Um, but yeah, the moment that it falls as heavy as this, I switch gears from, okay, I want to see it trade down into this and give me a rejection so I can take an entry. I switch gears to, okay, hold up. We're trading down heavy. How does price react when price gets into the level? Do we get immediate reaction? Do we reject immediately and start going up higher? That's what they do when they really don't want to stay there. They trade into it, bam, and bam, they pull it right back. Pull it right back above the consequent encroachment. They don't want to stay in there. They don't go back down there either. From that point on, one of two things happen. You either start moving higher and you close outside the level. And if you didn't take that entry, it's gone. It's done for. Scenario two, price trades a little bit higher, stays inside the PD array, okay? Stays above consequent encroachment, gives you the rejection, starts kind of trading bullish, closes right inside the level or right outside of the level. Okay? So I'm basically let me see if I can find you an example. So okay, well I can't really find you one here. This is just not clean. But let's say it would be something like this candle here. Price trades down into the level. Okay? In the level. But then it kind of starts moving away. And then you get the first scenario that I talked about where price trades into the level and then it just completely runs out and the stop would be way too big if you try to get in there. So that's what I'm kind of talking about. Okay, I'm kind of you get the idea of what I'm trying to talk about. Sometimes price would kind of you know it, it's still kind of giving you some time to get in. But usually I like to see price fit into the level, and I love to see the immediate rejection. When I see that immediate rejection, I know these guys are in here. They're gonna push this thing. Okay, that's when I feel confident to take an entry. But when price starts going down like this and it starts hanging around and starts looking heavy and fools around, goes below consequent encroachment, closes below, then I'm like, okay, hold on. This thing looks heavy. So at that point, it's you know, it's not what I like to see. So I look at feedback from price action at the level. I look at how price reacts, how it trades. That tells me a lot about, do I want to get in or do I not want to get in? And the only way to get that really is by having years of experience and tape reading and sitting live with it, looking at it, not back testing it. I wouldn't really say. You got to be looking live, tape reading it, because you got to see the reaction that price has at these exact levels. Then you'll start to see price goes in there and then it immediately pulls back and starts running, or immediately pulls back and slowly starts to show signs that it wants to rally, closes, and the next candle it'll open up and it'll start rallying. Or times like this when it just comes down into it and it just closes below consequent encroachment, and it ain't gonna rally. The only way you can get that is by going in there, tape reading it, looking at the price action live. Look at candles printing, study them. But that's what I look for. Didn't get it there. So Macy stayed Macy for the rest of the session, and then it ended up tanking. Okay, done deal. Simple as that. That'll be Monday's trading. And then it traded lower for the rest of the day. So if you took this, even if you took the high, we never traded back above and reversed. So there just wasn't anything else to take. So that's just done for that. Okay. Let's look at Tuesday. So for Tuesday, which was 2 days ago, Tuesday we had a London low. I was initially looking at this high. Okay, we traded through it. We didn't get the bearish closure. Okay, so let me just draw the line because this is important. Okay. We didn't close below the level. And this would be a Asian high. So see on a 1 hour we traded above it. Yes. What do we want to see if we traded through a bullish level? And I'm expecting it to run lower to these London lows, which by the way, yes, they are equal, very equal lows. So you would expect bearish candle. What is this? That's a bullish candle. So what do I need to do now? Now I need to wait for the next candle to close bearish. What does it do? It doesn't close bearish, does it? No. So I got rid of this. And I had this and this on the chart. And I also had this low just in case I wanted to go rally. That would be the next target. So we traded higher through this level. I kept it on the chart because if it wants to trade back down below that, then I want to see, okay, I had this level, I traded below this one and this one. So it really, it's going to be a bearish setup. Okay. So 10 o'clock, 11 o'clock is where I would go in, hunt my set. So we trade higher, need to wait, trade lower. Okay. Lower candle close. So it's 11 o'clock on a Tuesday morning. What do? I go down lower and I see what is happening. Okay. See here. 11 o'clock, 10:55, 11 o'clock. Right down there. What are we presented with? Notice on the 1 hour chart, we had a bearish candle that closed with a lot of conviction bearish. That's what I wanted to see in the previous setup. So now we got it here. Right off the bat, high, low, higher high. Down close candle, breaker. What do we got sitting right here? Tiny fair value gap. You could also look at these up close candles as an order block. And we had another gap right here. Okay. So breaker block, order block, fair value. Now, one thing that I wasn't crazy about in this set was the fact that we had another fair value gap sitting here and another one sitting right here. Okay. Wasn't crazy about that. So uh I opted to just go for breaker block. I was looking at this to see if it wants to get to this level and the order block. And primarily this fair value gap and this one. The rest of them disregarded because these are nesting PD arrays. So higher probability, so that's what I'm looking. So immediately we start trading higher. So as soon as we start trading higher, I say, okay, we're gonna go up, we're gonna hit the level. So I can already mark out where's my TP, where's my entry, stop, and TP. That's what I'm looking for. Now, very next one. What did I talk about in the previous on Monday's thing? I want to see them get in the level, stay below consequent encroachment. It's gonna do one of two things. It's gonna get in there, immediate reaction, get out. You didn't take it, it's done. You missed it. Right? This is one of those cases. Traded up here. I was looking at it, I was watching it, it just started going off lower. I took the entry probably around here somewhere, okay? Anyway, yes, it was a live trade. I had my little cookie cutter. You take your entry, and I was watching it. Stop would be roughly about here in this area. 15%, that's a nice stop. It's above that breaker block. Consequent encroachment. It's sitting right inside this higher fair value gap. We're below this lower fair value gap. And we got that order block sitting there. Okay, so that's solid. So I watch it. I watch it. We're going down, we're going down, we're going down. And then I see it starts stagnating. Stagnates. And then meanders a little bit, meanders a little bit. And I'm like, we don't have anything as far as high impact news that's going to come in and push this thing. It's already 11 a.m., which is late in the day, very close to lunch. Price action has not been the best. I'm closing it. So I closed it. Closed it there probably well, I probably banked about, I believe I think it was like 3.5 handles. Okay, which is not much at all. Something like that. No, I traded it was about 4 handles. 4 handles, yeah. I'd say. Not disclosing the prices. Told you in the last one I'm not told you the last one I'm disclosing the prices at. So that's what I was looking at. It gave me all the signs that were good, that what I would be looking for, and if the setup presents like this again, then I would 100% take it again. The only thing here that had me watching, managing it very closely was the fact that price action is not the best. We don't have high impact news. It's kind of late in the day, sloppy market. So I'm not expecting much. NFP week, first week of the new month. So my expectations are low. The only thing I'm looking for is getting in, taking a small chunk of meat, getting out, being content. That's it. I'm not in here expecting a home run. Just in here to get a chunk of meat and that's it. I'm happy. Done with it. So that was it. That was a chunk of meat. Took it, went home with it. And I'm glad I did. In the next candle, we opened up, traded higher. If I didn't shake my chunk of meat, would have been a stop. Okay? So that's why when price action is like this, that's why I close it. Because of conditions, because of what's going on. I'm not expecting a massive runner. So that's why when it starts stagnating and fooling around, I'm taking it. I'm paying myself. I'm working. I'm coming to work, sitting down. I did the work. I'm paying myself for it. Okay, that's it. Done deal. Not in here playing games, folks. If any other day in a market that didn't have these bad conditions, then yeah, I guarantee you this would have traded higher, did this exact same thing, reject level very strongly, beautiful. In the next candle, open up, and I can almost guarantee you in this candle, it would have probably been a bearish close. Open up in the next one, it would have started trading lower. It's not going to be hanging around or going higher or doing. It's not going to be hanging around in this puppy. It would have been. It would have been moving down lower. In the next one, open up, continue down lower. It wants to get somewhere. It's going to go somewhere. It ain't going to stagnate like this. Okay. So that was what I saw there, and that was my cookie cutter for the week. Done. NFP week protocol is Monday you go in, Tuesday you go in, Wednesday morning you're done. That's it. That is it. So there was my planning behind the setup. Okay, I was looking for an entry there, stop would have been there, and this was where what I banked pretty much. Okay, more or less. But I was looking for 22. I was looking for this, but that was what I more or less what I banked on it. So there it is. And then what it does is it trades up higher. Okay. All right. The next candle, bam, bam. So if it presented me with this, okay, traded higher like this, What did I talk about in the previous example? It's heavy. We're above consequent encroachment. So what am I? So then I say, okay, hold on. Whoa. I'm taking a step back. Show me what you want to do. Next candle. Bam. Trades the high. Reverses. Moves down lower. This candle starts trading lower. I would be waiting for price to give me a closure below this consequent encroachment because it could do something like this. So I wouldn't have taken that. It could do something like that where it pulls back all the way. Then you're in the red, and it reverses. So it needs to close below consequent encroachment. Okay, but it closes down here. I'll take an entry because then it showed me what? It showed me that it's willing to get rally out of the level. Okay, it's willing to get out of there. It doesn't want to hang around in there. Now it's showing me I'm going to hang around in here. Okay, I'm still hanging around. I don't want to see that. What do we do in the next one? We get the closure lower. So then I'll look for, okay, can I take an entry? Is the stop still going to be feasible for me to carry the risk? Or do I pass on the trade and wait for something better? Or, and if the stop is not feasible anymore, do we get one more tap into this low where I can take something? If we do, then I'll take it. It's still valid. It's still valid to take. Although, again, like I said, I don't like to see price hanging around. Okay, I don't like to see price fool around like this. I mean, I wouldn't want to be in a trade where I took it right here and now it's doing this. Now it's fooling around. It's you know, I don't like it. I don't like it. I like to see give me a clean setup, give me the entry, and then I want to see follow through. If I don't see follow through, then I'm closing the trade. I'm not going to be sitting around here with it moving around, moving around, moving around, hoping it's going to go somewhere. So I don't like that. It's still valid to take it. Okay. You could take it here. That's a re entry. You could take it, and eventually it goes to take profit. But it lets you wait for it, it makes you work for it, it tests your patience. It's not something I prefer, not something that I like. But per se, if I was in this and it's sort of rallying down like this and it wants to kind of start reversing on itself, you know that I'm out. Because then it's okay, it's gonna range. So then I'm out. If I took an entry at that, I would be out. But anyway, that just explains to you how I would approach this logic. And then after the fact, it ended up rallying. There you go. Ended up rallying. Is that relevant to us? Absolutely not. See, we didn't really take out any lows. So it's just not a setup in my book. So I just don't look at it. Right. Wednesday. Let's approach this PA. So Wednesday morning we come in. What do we see? Okay, well, this low. I wouldn't be looking at this high because 7 o'clock traded through that. So it would already have traded through this when I sit down at the chart. So my first level is going to be this. And then I would probably say, okay, well, that's a tight range. So I'm going to probably look at this. And then I would have to wait for this candle closure to say, okay, uh, we would get a high in place, which in this case we didn't because we had another candle here. So as soon as this candle closes, then that would be a high that would be put in place. So this is 5 a.m., which 5 a.m. will be a London low, and this is probably an Asian low. Then this is an AM high. I want to approach it like this first, but we will go down and I'll take a look at this. Take a look at this, and I'll take a look at this candle as well. But first, I would approach it the way that I would approach this. So at 8, what we did at 8 was through this high, close lower in the next candle. So first, I would not approach it. Wednesday. So pretty much, as far as Wednesday, there just wouldn't be a setup here. Just didn't close back below this again. Only did so PM. PM I don't trade, so I don't care what happens PM session, okay? I don't care. So there just wasn't any trade. I can't see any high that's been taken out and rejected. Okay, so there just is no trade. Unless you look, okay, well, this is way too late in the evening, okay? So that doesn't even count. But let's go ahead and let's say we were noticing this and we were looking at it. At time of day would be 8. Wednesday, 8:30 core retail sales. There would be a driver, so you could expect something to happen, and you could look for a potential set at 9 a.m. So let's look at that play and let's see how this pans out. What is that? 3 a.m. London high. Let's go study this. Preferably, that would be a bit early. I usually would like to see something at 9ish, 10ish. That's kind of like the sweet spot. At least that's what I've seen so far. But we didn't have that for retail sales 8:30, and we didn't have that ADP non-farm employment change 8:15. Okay, so we didn't have some volatility coming in. Okay. And I'm saying okay because look at this price action. It's pretty junky, guys. Really junky. Junky, slumpy. Right off the bat, I just don't like this. To me, it's like, okay, well, what am I supposed to key off of here? What am I going to, I mean, this is not going to be a break block. Order block, not the cleanest. So I mean, I don't like that. Fair value gap here, that's the cleanest thing I've seen. Inversion back there. So you see now, you see where I'm going? See what's happening? See why I talk about the clean base that I want to see? I don't want to be going in here guessing. It needs to be staring me in the face. Okay, if it doesn't jump off, then I'm not going to force the idea. Obviously, you have an order block here with an insane range. Okay, so that it's actually be out of my range, so I wouldn't be looking at that. If I'm taking an entry on this, then I would be looking for 15%, which is going to be mean threshold of that thing. Anyway, nonetheless, let's look at it. So you would be looking for a setup from 9 a.m. So 9 a.m. we just don't get anything. And there's the move lower. You would be looking to be in something by that time. Nothing happened. Nothing happened. So protocol, guys, if 9 a.m. comes around and it's 9:30 and I still haven't gotten anything, I mean, it blew past this. If it traded this and it respected it, but it blew right past it. So there was no respect shown. So that invalidates the possible setup that there was that's staring me in the face. That's invalidated. So there just is nothing else for me to be looking at here. It's just simply ranging. It's ranging. So as soon as it starts ranging, then I go like, okay, I'm going back up to a 1 hour. I want to see it take out a high, and I want to see a rejection. So it then needs to meet the criteria once again for me to go down looking for a setup. So done. That's just it. There just was nothing. Some NFP weeks on a Wednesday, you're gonna get good price. Okay. Sometimes you're gonna get bangers. You're gonna get real good movers on a Wednesday and a Thursday. On other weeks, you're just not gonna get anything. It's gonna be dead. But the protocol, the rule, the recommendation that ICT gives you, the NFP protocol is Monday and Tuesday are trading days. By Wednesday, you are done. That is the protocol for the trader that is new, that is starting out as a trader. If you're advanced and you know what you're looking for, you can go in and you can look at it, and if something presents, you can take a setup if it presents. But this protocol limits you to Monday and Tuesday, so it limits your exposure to the market, which in turn, you're not going to be looking for something, looking to do something. I want to do something. I want to get a trade. Okay. So that limits your exposure to the market. So it's just good to keep you out of it. Okay. When there's low probability, better just stay away. Now, on a Friday, after the NFP release, then you can trade once the news has surpassed. If there is a setup that's clean, that's high probability, then you can take that trade. But even then, still be cautious. Still be aware that you're in an environment that has elevated risk, elevated manipulation. Okay? So be aware of that. And, you know, it's Easter weekend. So we got holiday time of. So what's people do you think people are going to be sitting trading? Do you think the billionaires are going to be sitting here looking to make money? Do you think they are going to have an itch? I want to say something, but I'm not going to say it. Do you think they're going to have an itch to sit here to make money? They're not going to be looking to sit here to make money, guys. The guy's got enough money in his bank account. He's not going to care about about sitting here trading it, knowing what's going on, knowing that it's Easter, knowing that the major money is not in the market. Okay, it's elevated risk. Anyways, it's the first week of the month. NFP. Okay, maybe if it wasn't NFP week, a normal week, and you had something like PMI, different scenario. Okay. So I'm not going to be in the market because I'm going to be away spending time with family. So ain't going to be looking at it today, ain't going to be looking at it tomorrow. Right? Ain't going to be looking at it. It's holiday. It's holiday, man. Okay. So do something else. Go read a book. Go for a run. Go do some exercise. Go watch some TV for goodness sake, or spend some time with your family, or spend time with your loved ones. Do something else. If you really want to be sitting down here and you really got nothing to do, study. Go look at an ICT video. Look at a Jade Cap video. Do some journaling. Do some reflection. Don't go in there trading a prop account or trading a live account. Do something else, man. Preserve your capital. Do something productive. So next week, we open up Monday. We open up with PMI. Okay. Just want to check over the weekend. Okay, so Sunday we got this. Monday we open up PMI 10 a.m. Oh, jeez. I ain't gonna be in front of my desk Monday. I might glance at it Monday. I might glance at it. Let's first look at the rest of the week. Tuesday, nothing. Okay, Tuesday's not gonna. I'm not gonna bother looking at it Tuesday because there just ain't nothing. I wonder, do I have? Okay, I do have low events turned on, just in case there is a holiday or something. On Thursday, I like this. Wednesday, here we go. FOMC meeting minutes. Now, this is not the two-stage delivery, so I'm not. It's not the typical. You got to be careful one. I talked about this a while back. It's not that one. It's just an FOMC meeting minutes, 2 p.m. So there just ain't much. I mean, you can glance at it. Tuesday, Wednesday morning probably ain't gonna do as much because they're expecting that PM release. So Tuesday maybe there's something that comes into play. 8:30 we got core durable goods. We got that going for it, which might bring a bit of volatility in. And then Wednesday in the morning, not much. I personally wouldn't even bother Wednesday. Just leave it. Because Thursday morning, you got final GDP and core PCE. So that's going to bring in volatility. On Friday, CPI. Okay. Friday, CPI. So I don't even think Tuesday is going to be doing much, to be honest. All the volatility comes in after Wednesday PM, Thursday morning, Friday morning. Okay. So Monday morning is a potential trading day. I'll look at it on the phone. And I don't like trading on the phone. I really don't like that. Don't have a laptop with me that I'm gonna take with. So I might just leave it to do whatever it wants to do and come back. And sometimes it just is like that. You just leave it to do what it wants to do, and that it's gonna repeat anyway. So there is no FOMO, but definitely Thursday and Friday, yeah, work days, baby. So that's what we're looking for next week. So even just looking at this, I'm like, you know what? Might as well just not bother today and tomorrow, because market conditions are bad. They are bad. So I just would don't waste your time setting, man. You're gonna sit. You're gonna look at paint dry. You're gonna be looking at paint dry, dude. Oh man. So yeah, hopefully you guys found something insightful, and hopefully you've learned something, because I did cover some really good points that you should be writing down in your journal. So yeah, until I speak to you again, enjoy your Easter weekend, folks, and stay safe.